Welcome to Trading with Certainty. Develop and unleash your trading instinct. Today we're going to be going over some information that will help you become a better trader. So sit back, relax, and enjoy. And what we have here is some simple lines that should give us an idea, a bigger picture. I have this on the weekly chart of the environment that we're in. Obviously, we're in a bear market. We're all feeling the pain. So we'll start from the left, the lines on the left to the right, and we'll talk about these and what price actions we could see in the future and how we can position ourselves around that. So this is pre-COVID right here, February of 2020, and this indicates an important area because it was a resistance, and you can see here it kind of hammered in and through it as well. So this was a key area around 340 on the SPY that we had trouble. And what the market likes to do is after it breaks this resistance area, which it wasn't in 2020, it likes to come back and retest it. So this is what this bear market is doing, is it's gravitating like a magnet to 340. So that's why we drew that line there. And now if we go more to the right, what kind of pattern are we seeing here is kind of like a downward wedge, right? So we have 3 points here where we can draw a trend line, and then we have 2 where we can draw another trend line. It's like a descending wedge. And what we could see is the market kind of chopping in between here for some time. That is one scenario that we could see until finally maybe in mid-June next year. So we could be in this pattern for some time until we actually see a breakout to the upside up into 2024. That's a possibility. The second possibility is I drew the Elliott wave. I just drew 5 wave. Now I'm not an expert on Elliott wave. I just noticed that we could see we do have a 1, 2, 3, 4, 5 fifth wave. We're on the 5th wave of this correction. Most corrections come down in 3 wave, but this one is looking like a 5 wave. And where can we possibly go at the end of the 5th wave? Well, 340. So if we end up coming down to 340, personally, I think this is a great buying area with a risk of about $20 here on the SPY. So we could, in the worst case scenario, we could go all the way down here to 320. But if you have a long-term perspective and you want to hold this, through 2023, your risk reward is really good because one, let's see here, price range. No, we want to do. So if we do get in here at 340, right, your risk here is roughly 6%, and we will most likely, this is a key area of a breakdown candle. We can say like somewhere around here, of roughly $73, right? So you're looking at you're risking 5% for a 20% return on your investment. And bullish case, this is a moderate target, and then an aggressive target would be going all the way back up here, which would be a 40% return on an investment. So long term, I think your risk reward is great. As long as there's no World War III, nuclear bombings, those types of catastrophic events. So I think it's a good time to wait and see what the market does, to see if it really can push further down here to 340 and have that capitulation, really scare people out of the market. And I think it would be a really good entry on the spot. So that's my analysis. Obviously the time frame is up until the end of 2023. So if you are going to be looking at buying into the SPY or buying this is my opinion, it's not financial advice. You definitely want to hold for at least a year because I think there's some tax incentives behind that as well, but definitely do your own research. So thank you for watching. This is Trading with Certainty, signing out.